Hi everyone, I'm Donna. I'm the president here at Bookkeeping Made Simple, and today I'm going to answer a question that was posed to me by one of my viewers. Before I get into that, of course, as always, if you enjoy these videos, if you can come bringing you good content, please like, share, and subscribe. If you have any specific topics you'd like me to cover, comment below. And of course, if you're interested in receiving a free consultation about your business and to see if we are a good fit, not everyone is, feel free to give us a call at 801-692-0032 or visit our website at mysimplebookkeeping.com. So the question is investing in precious metals a good hedge against inflation? Which is a great question because inflation is insane right now. So if you're looking to protect your wealth from the effects of inflation, yes, investing in precious metals is a good option. Now, before I go further into this, I do want to stop and point out I am not a licensed investment advisor of any kind. I am an accountant, and that's all. So don't run and do what I tell you to do in these videos without talking to someone who is a licensed investment advisor. If you need someone to talk to about it, I have a few people that I work with. Feel free to let me know. But we want to make sure that you're getting the specific information that has to do with your specific circumstances. The number one answer in accounting is it depends. It always depends on what your specific situation is. So keep that in mind as I'm going through this information for you. Precious metals hold their value. In other words, an ounce of gold is worth an ounce of gold, regardless. They are actually the baseline against which everything else is measured. Now, with that said, so they maintain their value during times of inflation. We see that because the dollar becomes devalued. The dollar is actually what becomes devalued. So if you're looking for something to hedge against inflation, gold and other precious metals are a really good choice. There are others. Gold and silver are the most popular. Platinum and palladium, among others, are also, great commodities to hedge against or to hedge with. But we're going to take a little closer look at why precious metals are a good hedge and sorry, I am it's frustrating. I try to make sure I have everything straight before I start these videos, and it's invariably I have to redo something. Here we go. So this is a great way to make the most of to diversify your portfolio is always the first thing we want to, you will want to diversify your portfolio. Sometimes stocks go up, sometimes gold goes up. So let's talk about why precious metals are a good hedge against inflation. And again, if you're interested in purchasing, I have someone I can refer you to who will be able to be an investment advisor. Their value, precious metals the value is not pegged to the stock market. The stock market is highly volatile. They don't fluctuate with the stock market or any other economic indicators. Like I said, an ounce of gold is worth an ounce of gold. So they typically maintain or even increase their value during times of inflation. This makes them an ideal investment for anyone who's looking to hedge. We want to make sure that we have at least some of our investment portfolio in something that inflation really doesn't make a big difference to. Gold and silver are two of the most popular precious metals that people use as a hedge, but they're not the only ones. Like I said, palladium and platinum are two others. And there are other metals that are commodities that could be used in a similar way. They've been used as a hedge against inflation for centuries. In fact, prior to fiat money coming onto the scene, and fiat money is simply money that's money because the government tells us it is, gold was the currency. It was the currency. That's just what we traded in. That's why there were huge, massive gold reserves in every country, because it was necessarily to pin their currency to gold to make it worth something. However, after the Bretton Woods Agreement in 1944, the United States dollar became the world's reserve currency, and gold was no longer circulating. So you can still buy gold with dollars, but it's not, the dollar is not pegged to gold. And it's, you don't get dollar coins as circulating typically today. Despite the United States going off the gold standard, which it did fully in 1971, gold and other precious metals continue to be used as a hedge against inflation by investors, central banks, and individuals. In recent years, there's been a rise in interest in precious metals as an inflation hedge, especially as we've seen this out of control. Inflation is now at the highest rate it's been since at least the 1970s, if not before. There's global economic uncertainty, say that 5 times fast. And there is a potential for either quantitative tightening or quantitative easing by central banks worldwide. They've been doing some tightening, but I think it's making people not very happy. So there are several ways to invest in gold. You can buy a physical metal, you can buy gold bars, gold coins, silver coins. So then you have the physical metal in your possession. You can also purchase shares of mining companies or ETFs that track the price of precious metals. This is done very similar to the stock market. You don't actually have the metal in your possession. It's done similar to trading in the stock market. And you can purchase futures contracts for precious metals. It does have its pros and cons. Everything always does. On the plus side, hedge against inflation, yes. They also have the potential to provide significant returns. Now, the individual who is asking about a hedge against inflation, I don't know if he was looking for very specific returns, but they could provide significant returns. Certainly, they will retain their value against the dollar. And it is a relatively safe investment, since the value is not directly tied to the stock market, CPI, unemployment, or any of the other economic indicators that we usually are looking at. On the downside, prices can be volatile. And that means that measured against the dollar, the price, the number of dollars it takes to purchase gold can go up and down. It can be difficult to sell if you need to cash out quickly. They're not very liquid. Currently, we don't use gold as a currency, but that you can sell it as a commodity. And it's not right for everybody. There is a risk anytime you're doing any investing. If you're looking for a safe investment that will protect your wealth against inflation, then this is a really good option. If you're looking for an investment with the potential to provide high returns, then you might want to look at other options. Certainly, precious metals have that opportunity, but keep in mind that anytime you make an investment, you do run the risk of losing money. So if you are very risk averse, then this might not be the best thing for you. And come to think of it, if you're very risk averse, there's not very many investments that are going to be very good for you. Investing is inherently risky. Keep that in mind. So with that said, please, I hope you've enjoyed this video. I invite you to join us on the next one that will be coming up soon. I'm still working on my outlines for those. hopefully this has answered your question. If you have more questions about gold as an inflationary hedge, let me know. I will be happy to delve into it a little bit deeper. And if you are interested in a free consultation about your business to see how your business is doing, especially as things are getting a little bit crazy closer to the election, give us a call, 801-692-0032. Phone number, website, and everything will be in the description. So I will look forward to hearing from you very soon.